You're welcome back. Well, Gender Lens Investing, GLI, is a strategy to investing that takes into consideration gender-based factors across the investment process to advance. It's been described as an impact investment strategy which deliberately integrates gender analysis into investment analysis decision-making. Well, we have to help us unbundle this and see how Nigeria is doing with that. Tokunbo Ishmael, she's a principal partner at Alethea IDF. She dissects, beg your pardon, the strategy in Africa and Nigeria. Hi, good morning. Good to see you, Tokunbo.
Good morning. How are you doing?
Doing good. Doing good. So how popular is this GLI in Nigeria?
Not very. Increasingly, people are becoming more aware of gender lens investing. Alethea Capital, which is a fund manager based out of Lagos, has invested in a number of inclusive strategies such as financial inclusion, energy inclusion, which people are more familiar with. And recently we closed over $100 million in funding to drive into gender lens investing, which is a strategy where, as you said, you consider gender-based factors to create value within businesses and to create opportunity and to close the gap on funding that is not enabling female founders and businesses that actually have an impact on women to secure funding.
So these days, it seems when we talk about gender equality, gender investing, you know, it's all about women. Is that it? Is that all there is to this gender thing?
You know, it's funny because just the other day I was saying to somebody, since when did the term gender just mean women? No, that's not all it is. However, let me share a couple of facts. Historically, most businesses have been run by the same type of people, same type of thinking, group thinking has come into it, and particularly historically, that has meant that it has been men in suits. What the research has shown is that when you have greater diversity from ownership into the boardroom, into the businesses, then you begin to have better decision making. You begin to have better corporate governance. And I'm sure we could dedicate a whole show to talking about the effects of poor corporate governance. But also just from a numbers point of view, businesses that are more diversely run, businesses that have a more diverse makeup in their employee force are superior performers. McKinsey and Harvard have done research that has shown that those kind of diverse businesses outperform their peers by about 20%. That's no mean feat. And really, women across the globe are the main decision makers, purchasing decision makers in the home. In fact, over $15 trillion is attributed to decisions that are made by women. So if you are investing in a business that's not considering the tastes and preferences of women and how they make decisions, then you're cutting out on a big market. And so if you want economies to run at optimum level, to leverage all the assets, and women are seen as an underutilized assets globally, then you need a diverse population from the boardroom, ownership, through your company so that you can drive better decision making, better corporate governance, and greater innovation, which will enable you outperform.
All right, so it's good to understand this. So it doesn't mean that whenever we talk about gender equality or gender whatever, it's just about the women. But for these facts you have noted, that's why we're focusing on the women for now. So what types of investments are feasible when we look at the Nigerian environment at this time?
Well, every type of investment is feasible because there's a lot to be done. At Alethea Capital, we make investments that don't just make a financial return, but also solve intractable problems that we have in our society. I've mentioned about financial inclusion. Energy inclusion is another one, enabling more affordable access to essential services. And so for us, we focus on that area where we can solve problems. And when we look across the economy, we find that when households and businesses do not have access to finance, it inhibits their ability to function fully or perform as a business. When they don't have access to energy, it inhibits their ability to grow and scale their businesses. When they don't have access to good health, well-being, that inhibits their opportunities. And in addition to essential services, when we think about access, we also address food security issues. And this is where we see the greatest impact, in a sense, on households and businesses, because the agricultural sector is the largest employer in our economy. And also you find that the smallholder stake farmers are the ones that are more challenged in being able to connect and get access to markets. So we invest along the agricultural value chain, particularly in the ability to provide a chain for those farmers to get their goods processed, to get their products into the market, and to enable us to avoid wastage. And I can talk about a couple of companies that we've invested in. So for example, there's a company called Tomato Joss in Kaduna that we've invested in.
All right, Tokunbo, I don't think really would like to go into that. But when you talk about, especially in the agricultural chain, being the biggest employer of labor in Nigeria, unfortunately, oil and gas is still the largest contributor to the GDP. So what that implies, I think, means that this value chain has not been explored enough. And you have a lot of women out there who have the creativity, who are ready to, and then you have the issue of funding, access to funding, the request for collateral, the home front business balance and all that. What about handling, some of these issues, access to funding, requests for collateral for women, so they can become more active in this agricultural value chain, which has a lot of unused potentials?
Thanks. And you touch upon a key point, because we tend to focus on this idea of collateral, which tends to focus on one type of funding. We need flexible investment structures. We need flexible types of funding that meet businesses where they are. When you have small businesses, they typically don't yet have the hard collateral that will enable them to take out debt funding. So is debt the best type of funding? At Alethea Capital, we provide equity funding that enables businesses to grow. We provide flexible equity, and we look at a business's stage and state. So stage, if it's still early stage, that means it needs more patient capital. If it's already generating cash, can we structure an appropriate instrument that will enable that company to grow? So when we're talking about do they have sufficient collateral, I think that's not the question. The question is, what's the best type of funding for each type of business wherever they are?
And we look at the Sustainable Development Goals, which is the target is 2030. How does this gender lens investing, how does it feed into the fulfillment of the SDGs?
Well, to be honest, what Gender Lens is doing is saying, let's build a more inclusive society. Let's build a society for inclusive prosperity. Let's leverage every talent that we have, and let's do that in the most optimum way by leveraging the dividends of diversity. And when you do that, then if you look at the SDGs, it's not just SDG 5 about gender parity. It's more than that. It's about reducing poverty. It's about increasing well-being. It's about partnerships. It really is about leveraging all the resources to reach optimum levels. So if I talk about how Gender Lens will drive SDGs, it's across all of them and has the opportunity to help economies like Nigeria reach those SDGs. Unfortunately, by not providing funding that enables us to be more inclusive on a gender front, that enables us to be more purposeful about mitigating the risks of groupthink and poor decision-making and poor governance, by enabling us to think more broadly about the products that will serve everybody in the economy, we are limiting our chances to achieve the SDGs. And it needs to even go beyond that. And I also want to say one thing, that it's not just about being soft and charity and achieving the SDGs, but it's actually enabling our economy to reach its full potential. McKinsey says that globally, that we can add 28 trillion to the GDP of the world if we fully leverage and consider gender, fully leverage all assets, including women at all levels, and factoring gender. Ergo, in Nigeria, if we're not doing that, in Africa, if we're not doing that, we cannot enhance our economies, we cannot reach superior GDP levels, we cannot reach full potential in Nigeria nor in Africa.
All right. Thank you so much, Tokunbo Ishmael, Principal Partner at Alifia IDF. We will certainly push this conversation on gender lens investing and empowering, well, the women at this time. But of course, we need a balanced...
And the economy.
Yeah, of course, the women and then feed into the economy. Yes, of course. Thank you so much, Tokunbo, for sharing your thoughts with us this morning.